here, McCollum on Business. Yes, folks, we have a 7 a.m. business before work show for you here on this Thursday. We've been trying this out on Tuesdays and have had some good success with it. A lot of positive feedback. And of course, we review the numbers and everything. So this week, we're throwing in a Thursday morning show as well. We're trying to try new things here and everything, and seems to be working out there. So Thursday here, I appreciate you joining me, whether it's live or even on demand here at Robat TV. Of course, later on, for on demand, you can catch it on demand at Robat TV if you're not seeing it live, or you can hit us up on that YouTube page of our production side of things. It'll be there as well here as soon as we're done. Markets open at 7:30, but we got some pre-market stuff for you here early in the morning. So let's get into it with that Market Watch. And it's been one of those, I guess, mornings here, and I don't know if I introduced myself. I'm Stephen McCollum, by the way. We're going to get you updated on what's happening with the Market Watch, stories you need to know, pre-market stuff out there, and here's kind of what the market's doing a pre-show here as we're getting ready to open up here at 7:30 for the market. I can tell you the Dow futures right now, they're up 26 points here today. The S&P futures are up 17 points right now. The S&P 500 futures rose. Meta reported yesterday. We'll talk about them here in just a minute. And they're up big here in pre-market trading. Microsoft also announced their thing along with Tesla yesterday. Well, Microsoft has been down here based off of their reporting as well. So that's affecting the S&P 500 futures, but they're up about 17 points. The NASDAQ futures are up 38 points right now as well. And then you see Russell 2K, it's up about 14 points here in pre-market trading. And then Bitcoin, well, yesterday it was pushing that 90,000 level back down to 87,905 here early on this Thursday. As I said, stocks we're paying attention to. Well, we're going to look at the companies that reported yesterday afternoon after the markets closed. Today, we're waiting for Apple. They will report today after the bell. As well. So that's a big one here on the market. But Meta Platforms is our first stock we're going to look at today as they reported yesterday. Yesterday, they ended the day at 0.63% down. Well, here in pre-market trading there, as you can see, that big jump and then that part of that, that's the pre-market trading stuff, and they're up about 9% here today. Well, Meta Platforms called for first quarter sales to range from $53.5 billion to $56.5 billion. That does top the expectation from the analysts out there. They wanted $51.41 billion. Huge, big gain here above that estimated amount for Meta Platforms. Fourth quarter earnings did come in at $8.88 per share. They had revenue of $59.89 billion. Well, the market out there, they wanted $8.23 per share, so they kind of blew that out of the water by 50 plus cents. And then they wanted $58.59 billion. So they blew that out of the water as well by about just over $1 billion. In addition, Meta's Reality Labs unit recorded a greater operating loss than expected. So if there is a negative with Meta, it's that Reality Labs unit recording lower operating loss than expected. But everything else around Meta was good as they did their announcement, of course. Yesterday afternoon. Then, of course, we also got Microsoft's reporting yesterday. Not as good, folks. You can see yesterday they closed 0.22% up. And then everything after that big drop there, well, that's the pre-market trading as well. Microsoft is down about 7% here in pre-market trading. Well, their issue, cloud growth for them. Cloud growth slowed in the fiscal second quarter. And the Microsoft gave light guidance for operating margin in their fiscal third quarter coming up. Adjusted earnings did come in at $4.14 per share. That was higher than the consensus estimates that people were looking for. They were looking for $3.97, so they kind of hit that number really well. But their revenue of $81.27 billion for the quarter, that came in higher also than the expected $80.27 billion. So the problem with Microsoft is cloud growth, and also their operating margin, basically guidance out there. Market's not liking it here in pre-market trading. That is down about 7% in pre-markets here for Microsoft. Like I said, it's kind of dragging that S&P futures down right now. We'll have to see what it does here when the market opens around 7:30. And then there's Tesla. They announced yesterday as well. And We got a couple stories coming up here in this first segment on Tesla as well, but I'll give you the overview. Tesla right now, as you can see, finished the day yesterday, 0.13% up. And then pre-market trading here, well, it's up about 2.3% right now. Tesla did post better than expected fourth quarter results. They reported adjusted earnings of 50 cents per share. The revenue they reported was $24.9 billion as well for Tesla. Analysts, they wanted 45 cents per share, so they obviously beat that by 5 cents. And they expected the revenue of 24.79 billion, so they were just above that as well. So Tesla's revenue for the year though dropped 3% for the period. So they still beat the estimates, but they were still down 3% compared to previous years. And it's marking the first time on record that Tesla has recorded an annual decline in revenue. And we've got some remedies that they announced yesterday, and at least growth here that Tesla's looking forward to. Is if you don't know Tesla, all their stock price and everything here is based off of that autonomous vehicle, future, the AI future here for these companies. It's kind of what's tied to the stock price, not the sales of Tesla. And we'll get into that here coming up. And just a few stories from now. When we come back later and look at stocks, we're going to look at Southwest Airlines. We're going to go old school with an older company, right? International Paper. It's an old business out there. Then we'll look at the cruise lines. Royal Caribbean's in the news as well, as they did their first quarter announcement yesterday as well. And look, if you're looking to get on a cruise this year, book early because cruise lines are going to have successful years here by all indications coming up. But our first story here today, well, yesterday, the Federal Reserve came out and not unexpectedly, they did announce that they'll leave interest rates unchanged at this time. So that does break that three straight rate cuts roll that they had been on. And it's all over uncertainty over the labor market and inflation is why they left them unchanged. So they voted to leave the benchmark federal funds rate unchanged at that same level. That range is 3.5 to 3.75%. So, in the past, the last three meetings, they had 25 basis point rate cuts. That was in September, October, and December of last year. So economic data does show a slowdown in the labor market, along with inflation continue to run hotter than what the Fed wants of that 2% target, right? It's in that 2.7, 2.8% range here as well. So rate cuts have been put on pause here by the Fed as well. And so the question was what was the voting numbers? And I got that for you coming up. So there's a lot of division here on the decision to cut the rates in December. That was a lot of dissension there at that time when they cut those rates. A lot of people, I don't remember the exact vote, but it was fairly, tipped on both sides of it. Well, now this is a little bit more even in terms of a majority rule here in this vote as well. So the statement here from the voting committee and noted that data shows the economy is expanding at a solid pace, but they said job gains have remained low and the unemployment rate has shown some signs of stabilization. But they do went on to say, of course, inflation remains somewhat elevated at this time. The Fed's decision to put rate cuts on pause was expected, as I said, by the market. But their statement, along with Powell's comments during his press conference, well, they didn't signal. They basically said, we don't know what we're going to do in the future. We just know we're going to follow what the policies and what the reporting comes back to us as. So there is some fear out there and some likelihood that we might not see any rate cuts here coming up anytime in the near term coming up. And that's what investors were waiting for yesterday was, does it look like there's going to be a rate cut coming up in the future? Right now, that answer is no. And it was a 10-2 vote yesterday, by the way, on keeping the rates the same. Only two dissenters this time after having more of them over there in December. So very strong consensus here by the federal committee out there. Then we find out, yesterday as well that there's strong consumer spending out there, which kind of bucks the trend here, right, of what we're hearing and seeing in a lot of the consumer confidence reports and everything. But the U.S. economy grew at the fastest pace in 2 years from the July to September timeframe in 2025. Now, the government put this out, and it's a slight upgrade of its first estimate They put this out earlier today, excuse me, not yesterday, earlier today. America's gross domestic product, which, if you don't know, is the nation's output of goods and services. Well, they rose at a 4.4% annual pace in the third quarter. And this is all from the Commerce Department. As I said, they put this out earlier this morning. And so it's up from 3.8% in the April to June quarter. And then it's also up, obviously, from the 4.3% growth the department initially estimated. The economy hasn't grown faster since the third quarter of 2023. Consumer spending accounts for 70% of the U.S. GDP. That grew at a healthy 3.5%. Spending on services such as healthcare, that rose 3.6%. There was a 3% rise there on goods spending, including an increase of just 1.6% on what they call durable goods. Those are cars, things that are supposed to last more than 3 years. So 1.6% gain in that time period. A surge in exports and a drop in imports also contributed to that third quarter growth as well. Exports count as growth. Imports actually subtract from the GDP numbers. So less imports means, less things subtracting from that GDP side. So healthy consumer spending, at least back in the third quarter of 2025. It's contrary to what we get on the other reports. So it is fascinating to see. They do say we have kind of like a K-shaped, is what they call it, economy right now. Wealthy, still spending like nobody's business out there. And everybody else underneath the wealthy, well, they're pulling back and not spending as much and things. So they're calling this the K-shaped economy. And we're seeing that all throughout these reports. And, it is interesting that just these companies keep spending in huge amounts on AI, especially, right? And OpenAI has a problem. They don't have a company, right, like Google does or Microsoft to fund their AI side, right, with other revenue. OpenAI is its own customer. So they need some investments out there. And NVIDIA, Amazon, and Microsoft, they're all in talks to invest large money into OpenAI, combined about $60 billion into OpenAI. This comes from a publication called The Information. They reported this out yesterday. NVIDIA is an existing vendor or investor, I should say, with OpenAI. Their chips actually power OpenAI's AI models. Well, they're in talk to put up the most amount of that, $60 billion. About $30 billion is what they're looking to pump into OpenAI. Microsoft, also a longstanding partner with OpenAI, they're in talk to invest less than $10 billion this time, but they do already have several tens of billions of dollars already invested. But Amazon, it's going to be a new investor if they do go through with this. It's in discussions to invest significantly more than $10 billion as well. They say they could go up even higher than $20 billion in this investment, depending on, the terms and how they're going to work together moving forward as well. So, reports were earlier this week that SoftBank Group, they're in talks to invest as much as an additional $30 billion in OpenAI. They're currently an investor as well. So we're seeing big money going into these investment companies out there. OpenAI is grappling with rising costs, right, to train and run those AI models. And as I said, their problem is Alphabet's Google, right? Their AI system, they have a large company with income that they can support and put money into it. Whereas OpenAI is its own company. They don't have other companies to help fund it out there. So the race here for the investments is huge, but we're seeing those investments not slow down at all in artificial intelligence coming up here. Now, this next story, we're going to go to New York here, but it's a lesson on what can happen if the government kind of interferes with things and enforces things onto companies and stuff like that. This isn't a political speech. It's just what can happen on this side. So we're going to go to New York because this can happen anywhere in the country if government imposes things on companies. And so basically it has to do with Instacart out there, which is Maple Bear if you're looking for their stock out there. And New Yorkers have learned a very hard lesson here as well. And especially if they rely on the convenience of, Instacart and the delivery grocery service. Well, they were blindsided this week because Instacart suddenly, out of the blue, slapped a new fee on orders. So Instacart is doing this because it's tied to the sweeping city law that went into effect on Monday for these delivery services. So the fee that was put on to the orders out of nowhere, customers now have to pay in New York an additional $5.99 fee at checkout. It's labeled as a quote regulatory response fee is what they're calling it. Like they're not hiding what it is; they're telling you it's a regulatory response. According to the city's website, app based couriers, things like Instacart, things that deliver groceries to third party platforms, well, they're now entitled to earn at least the people delivering them. You can earn at least $21.44 per hour working. That same rate has been applied to restaurant delivery workers, things like Uber Eats and DoorDash since April of 2025 there in New York. The worker protection measure, it's going to further raise the minimum rate to $22.13 per hour by April, and that'll be done because of inflationary reasons. So there was no legal minimum specifically required to pay grocery delivery workers. So now, when you go to Instacart in New York at checkout, Instacart noted that the new fee, quote, helps cover our increased operating costs in New York City due to government regulations on delivery platforms. That's what they put on a social media post on why that 5.99 fee is there. Now, the law also requires delivery services to offer customers a tipping option before checkout. So they're requiring these delivery apps to put the default tip at 10% of an order's cost. Tipping optional, right? Well, they're almost making it not optional by making it be in there because you can miss it, etc. Now, New York City said the measures are intended to address practices that hide or delay tip prompts. They say that costs the workers over $550 million because they say people couldn't figure out how to tip. I say you didn't want to know how to tip if you couldn't find the tipping option. So there are Instacart had many cancellations of their service off of. We don't know final numbers yet, but we do know, according to people on the street, and then Instacart even said a lot of cancellations in New York City based off of that fee being charged at that time. So just kind of the unintended consequences, and how's that going to work with these services now, with people not wanting to pay those additional fees to get their groceries delivered out there. So something to pay attention to. And we're seeing this right in New York City, and whatever happens in New York ends up in California, and then can kind of move from there. So I wanted to make you aware of that type of a situation out there. And now let's get to Tesla here. They of course announced their earnings yesterday. We told you their stock earlier today. But now, yesterday, we also found out they're discontinuing the Model S and the Model X crossover luxury car. The Model S is the sedan, by the way, and everything. Well, they're putting these cars put the company on the map and made them kind of a state, especially the X, right, with those wings that go up and everything, and also six-figure, price tag for it as well. So they've the problem is these cars put Tesla on the map, but they haven't done any upgrades to them and everything. And now they're just old, outdated cars compared to newer electric vehicles out there. Well, so production on the S and X, well, they will end in the second quarter. And this was all announced yesterday on the company's earnings call. Sales, it's an easy decision to make for Tesla because sales of the S and X, well, they've dwindled mightily over the recent years. Deliveries of all Tesla's EVs, other than the company's primary vehicles, that's, of course, the modern Model 3 sedan and the Model Y crossover. Well, they totaled only 59,900 in 2025. So that was down 36% from 2024. Makes it an easy decision to cancel production when your sales are dwindling backward. Not dwindling backwards, skyrocketing backward as well. So the Model S, well, it was the first mass market vehicle when it debuted in 2012 in terms of the EVs. It established itself as a high tech ride with that sleek design that it has. Then the Model X came out 3 years later. It grabbed attention, of course, with that gold wing doors and six-figure prices, which I admit that is a fancy looking car out there. So why are they getting rid of them other than their sales and everything? Well, they need the space for other items out there. As I said earlier when we were looking at the stock, Tesla, it's not car sales that people are investing in it on. It's that AI stuff, right? And the cyber cabs information. People are viewing that side of it more often. Well, they need the space devoted to the production of the S and X. Well, they need that for the company. By the way, that's in Fremont, California. But they need that to produce the new Tesla Optimus humanoid robots, is what they're going to switch over and use it for from that side. Also, kind of continuation here, Tesla in that earnings report as well. They said they're going to invest $2 billion into Elon Musk's other company, the artificial intelligence company, XAI. That production, and they also said that the Cybercab robotaxi, the production side of it, it's on track for later on this year. So that's a continuation, a different story here, but kind of ties into the Tesla here with what they were talking about. The news supported Musk's plan to pivot Tesla from that electric vehicle maker to that AI company. That is key to the company's $1.5 trillion valuation. As I said, their stock price isn't because of Tesla sales. Their stock price is based off of cyber taxis and their AI and robotics stuff is what everybody's eyeing more towards. So investors are eyeing that more than anything else out there. That's why when you see the car sales drop, stock drops, but not in huge amounts, right? But Musk does have a plan to build cyber taxis as well as those humanoid robots. He also wants to do semi trucks, obviously those roadster sports cars. But a series of inventory investments will need, and that's capital event expenditures are very expensive. So this year, it's being told here, estimated that Tesla's capital expenditures will be above $20 billion this year. That's just investment to make these things. How much money is that? Because that's a lot of money, $20 billion. It's more than twice what they spent in 2025. They spent $8.5 billion in 2025, folks. That's how much this conversion over to make the robots and the cyber vehicles as well, the cyber taxis or whatever they're called. That's how much it's going to cost to convert to make those coming up here. Woo! That's a lot of money, folks. Tesla's in the middle of a transition right now out there, and now let's move to the music side of things. And if you have any music streaming services, Spotify is the most popular out there. So a lot of people consider it the best, but they announced some shocking things yesterday when they did an announcement. Spotify did announce that the company now accounts for roughly 1/3 of the music industry's recorded music revenue. 1/3 of it comes because of Spotify and their payouts. This obviously cements Spotify's position as the world's largest music streaming service out there. The company did emphasize that it made the largest single year payout to the music industry by any retailer ever. Revenue has been doubled since 2017. So if you don't know, you buy Spotify, you pay a music royalty fee that gets paid to the music companies. So as you play stuff, stuff gets paid out, right? He noted, or excuse me, Spotify noted that they've paid out more than $11 billion to the music industry. That's just 1 year, folks. That brings the company's total payouts to nearly $70 billion over time that Spotify's been around. So that was a big amount, right? $11 billion just last year. This is a historic milestone for Spotify, and it's allowed more artists to earn six figures annually from Spotify alone. Now, interesting enough, right? You think that's the big kid. You think that's the Taylor Swifts. You think that's the Beatles. You think that's the Elvises, right? All the big guys out there. Well, interesting enough, independent artists and labels, they specifically accounted for half of all royalties. Streaming services are becoming things. Well, yes, you listen to the old stuff, you listen to the popular stuff on it, but that's where you find new music and new artists in today's day and age, is where you're going to for that. And that shows that when independent artists and labels are accounting for half of those royalty amounts out there. So Spotify also listed new focus areas for their products and what to expect there with their platforms. Here are things they want to do moving forward. Shouldn't surprise you because they're looking for growth models, but they have efforts to increase discoverability amid a saturated market, meaning you're a new artist. Like if I put a song out there and I put an album out there, which I would never do, I'd spare the world that. But just ways to be discovered here in that because obviously there's a lot of music on there. So how do you get found? Well, they'll help with that as well. And then they also want to combat artificial intelligence exploitation against artists. So AI's taking over, doing making people's songs and not giving credit to the original songs. They're going to kind of crack down on that with artificial intelligence exploitation that's happening right now. But then they also want to generate ticket sales for live performances. So, for instance, you go on there and you find my album, which again, folks, don't look for it; it is not on there. But shocker, shocker. But then you find my music. Well, you can see where I do perform at. You'll be able to buy ticket sales through that platform. Kind of keep it all into one side of things. If you find new music that you like out there, so that's things Spotify wants to get into, but the behemoth is Spotify is not going away anytime soon. And folks, when we come back here at McCollum on Business, we'll keep it rolling. We got some local stories for you. We'll take a look at the market that opens up here in about 4 minutes here at 7:30. Come on back. It's McCollum on Business. Morning time. And we're back here, McCollum on Business Thursday. We're doing the morning show here as well, the morning business show. So thank you for joining us, whether it's live. We see you on there live right now. Appreciate it very much. And of course, catching us on demand later in the day, whether it be at Robat TV or, of course, on our production YouTube page out there for me, Kobe, Ethan's, Riley's production company. We appreciate you however you catch us here. Share the YouTube page with your friends out there as well. We greatly appreciate it. Pit stop on its way back here. We got Bowman Gray coming up. We're waiting for find out if that's going to happen and where because of some storms rolling through. Of course, Daytona 500's coming up here in a couple weeks as well. That show will be back here and starting its 2026 season here shortly. Then, of course, The Real Matrix, Fridays, 10 o'clock here at Robat TV. New episode rolls out. And then on the podcast systems there, just search The Real Matrix. It pops right up for you. Google, Apple, Spotify, iHeart, all of your favorite ones. Well, that comes out at around noon there on Friday as well. Right after this, we roll into the main event. Today's Thursday. Dale joins me for the beginning part of the show and takes off. And then Uncle Lou comes in. Big UFC fight last week. Big UFC fight this week. We'll get into that. And, of course, we got a Super Bowl we got to start thinking about as well. So Uncle Lou joins us here at 9 o'clock here on Thursday. So come over and join us, would you? And with all that being said, let's get back into the Market Watch. The market opens here in a 1 minute, 7:29 right now. It opens at 7:30. Right now, Dow futures, they're down 18 points. So boy, has that flipped because earlier today, those futures were in the positive. What you're seeing on the screen is just pre-market movement in terms of the regular market. I'm telling you about the futures right now. So Dow's futures are down 23 points. Big turnaround from what we talked about earlier in the show. S&P futures are still up, but barely. It's 7 points. The NASDAQ futures are down 3 points right now. The Russell 2K, it's actually up here as well, a few points, about 5 points today for the Russell 2K. And then Bitcoin back down today. It was pushing 90,000 yesterday, 87,755 for Bitcoin here today. So Meta, of course, way up in pre-market. Microsoft down in pre-markets. Tesla's up just a hair, about 2 points here in pre-market. So let's see what they do once the market opens. We're waiting for Apple to announce their reporting here after the bell later on today as well. Stocks we're paying attention to right now. First one, Southwest Airlines out there. As we're right in the middle of reporting season, they ended yesterday down 1.16%. Well, here in pre-market, they're at 5.3% as of right now. They're forecasting a surge in 2026 profits. Obviously, they've changed their business model. They now do assigned seatings. You have to pay for seats, valuable seats. You have to pay for that. So they're all of that is leading, and they're saying to higher 2026 profits on the back of you, the consumer, of course. Southwest Airlines said it expects to earn an adjusted $4 per share in 2026. That's higher than the $3.19 that analysts had pegged in there at that time. So Southwest Airlines in pre-market, way up about 5.3% right now. Let's go to an old school business, right? International Paper out there. They're a large company, and they said they would split this morning. They said they would split into two independent companies. So yesterday they finished down 1.68%. The announcement of the split in pre-market trading, they're up about 3% here today in pre-market trading. The separation will spin off the European side of this business from its North American business. So there'll be International Paper no more, I guess you can say. International Paper also reported a revenue beat for its fourth quarter. Its earnings per share, though, was below the expectation level at that point. International Paper right now in pre-market trading at 3% up. And then we're going to look at Royal Caribbean, the stock here of the cruise line. Yesterday, they finished up 0.3%. And then in pre-market trading, up 7%, folks, in pre-market trading as the market is now open. So they had their first quarter adjusted earnings in a range of $3.18 to $3.28 per share. The expected level was $2.91. So big markup here for Royal Caribbean as well. Its fourth quarter adjusted earnings of $2.80 per share was in line with what the market was looking for. Its revenue, though, did miss estimates here for Royal Caribbean, but up in pre-market trading big. As the market's opening right now, we'll see what the market does, but kind of a mixed bags here this morning here on the stock market. Now let's get into some of these local stories for us as well as we're seeing the market open up, and it is official. Arizona is the number 7th growth state of 2025. Of course, we get these numbers from U-Haul. This is the U-Haul Growth Index. It basically analyzes migration data of people that rent and buy from U-Haul over the last year. It's based off of one-way customer transactions there in 2025. We did slide though. We were at number 6 in 2025. I'm sorry, in 2024, and then we moved to 7th in 2025. We traded places with Washington. So it's the 6th consecutive year Arizona has been among the top 10 states for the net gain in those one-way U-Haul customers. So if you want to compare it to 2024 some more, U-Haul customers coming to Arizona, well, it rose 2% year over year. Departures, though, they also rose 2%. We're having more people leave us as well as join us here in Arizona. So U-Haul Growth Index isn't a small index. It's compiled by more than 2.5 million one-way U-Haul transactions that occur in the U.S. and Canada is how they get these figures. Texas, Florida, North Carolina, Tennessee, and South Carolina, they're the top 5 growth states of 2025. It's the same top 5 from 24 and 23, but different orders in those 2 years. Texas did pass South Carolina for the top spot, and they kind of traded it as well. Some of those change out there in terms of the rankings. California did come in at 50th for the 6th year in a row, meaning everybody's leaving California as we hear the rumor mills and everything. They're the largest net loss of one-way U-Haul customers, and it's not even close. Massachusetts, New York, New Jersey, and Illinois, Well, they're also among the bottom 5, right? For those of you in politics and everything, what do those states have in common? We don't do politics here, but heads up on that side of things. Where are people moving to in terms of like huge growth? Well, Oregon moved up 23 spots, Mississippi moved up 18, Colorado moved up 17, Nevada 15, New Mexico 15 spots up, Louisiana 13 spots, and Montana 12 spots up. They're the biggest year-over-year gains there by the states as well in that growth index. But overall, we are in that top 10 again here for that U-Haul growth of people coming here. And the U.S. Department of Revenue wants you to know, do not wait to file your taxes. Despite the lack of the approved state tax code for 2025. Remember Governor Hobbs and the Republican lawmakers? Well, they differ on how much of that federal tax code that passed in that one beautiful bill. They're arguing over how much of that should be adopted here at the state level. And they don't want you to know. Do not delay your taxes. You might have to do an amendment coming up. And by the way, they're anticipating so many amendments having to be done. It's going to cost the state about $20 million to process those amended ones. But they're saying don't delay your taxes. Get your refund now, and you could do an amendment later as well. So they wanted you to know that, so we're passing that along to you as well. And let's go up to Wickenburg here really quick. A Western Museum up there in Wickenburg. Well, it's changed its name, and there's a big expansion project going on. And they got one of the largest gifts made to an arts and cultural organization in Arizona history. The Desert Cabela's, I knew I was going to screw that up. Cabela's Western Museum up there in Wickenburg. Well, it's changing its name. It's now the Singler Western Museum. It's being renamed in honor of the longtime donors and a local company there, Carrie and Jack Singler. The museum has displayed its Western art and Western history collections for more than 50 years. 2027, well, they're adding on to that as well, thanks to the Singlers' $20 million donation. Among other gifts that they get, its collections will be split up between 2 facilities. This museum has about 650 pieces of art, but a lot of that is in storage because they don't have enough space currently to put it out. So this new building they're going to build here, well, it will become that much needed expanded space to display all of the pieces of art. The museum will be open throughout construction, and they will balance both collections as they're building that site. But name change there for that museum. If you see a new museum opening in Wickenburg, it's the same one. It's just a new name up there as well. And finally, here as we wrap up this Thursday morning edition, local company that's grown huge, right, over the years, Discount Tire. Well, they've now re-upped with Team Penske. They've announced an extension of that partnership that the two have here in the racing world. It spans nearly 2 decades, and it's obviously the leading tire company and the one of America's most successful motorsports organizations out there with Team Penske. So the terms will keep Discount Tire a top-tier sponsor of Team Penske. It's going to continue to serve as the primary partner for the number 2 Ford. That's driven by the Austin Cindric. For some reason, I had a brain fart there. Austin Cindric drives that. Then it will be on the Daytona 500 car. And Austin Cindric Discount Tire was on that car when Austin did win that 2022 Daytona 500 as well. It'll be a primary sponsor of the number 12 Ford as well, driven, of course, by NASCAR champion Ryan Blaney in select events. It will be an associate partner across all 3 Team Penske entries. So that includes Joey Logano. Well, they'll be on there for one race coming up as well. But new for 2026, Discount Tire will serve as a partner for 3-time champion Joey Logano. That's the number 22 car. So that's new this year. Joining him as that 3rd car as well. If you don't know, Team Penske, very successful. They've won 3 consecutive Cup Series titles and a total of 5 championships during Discount Tire's time as a partner. They didn't win it this year. They won 3 before that, right? And then this year, Hendrick Motorsports ended up winning it with Kyle Larson here in this last year. So, they have had success with Discount Tire. Discount Tire's got a lot of promotion on Team Penske as well. And then also, the partnership's going to continue with Team Penske's winning IndyCar Series program. Discount Tire and Tire Rack, they'll return as associate sponsors. Across that, number two, Chevrolet in the IndyCar Series. That's driven by two-time Indianapolis 500 winner, two-time series champion, Josef Newgarden is a main sponsor there, or driver there of that car. The number three Chevrolet, number three Charlotte, the number three Chevrolet, piloted by seven-time series winner Scott McLaughlin. They'll be part of that as well, and even then, a younger driver out there, right? Fifth series driver, David Malakis on his car, the number 12 in the IndyCar series as well. So, interesting enough, on the NASCAR series, they will be on the Daytona 500. Discount Tire will. Circuit of the Americas, Las Vegas Motor Speedway, Darlington, Bristol, Kansas, Texas Motor Speedway, Michigan, Sonoma, Indianapolis Motor Speedway, obviously Phoenix Raceway, Charlotte Motor Speedway, Martinsville, and even Homestead, Miami, which is the championship this year for NASCAR out there. So Discount Tire continuing a very successful partnership. Lots of advertising there on those cars as they generally are in the front there in both the NASCAR and the IndyCar series coming up as well. So, folks, appreciate you joining us here for this Thursday morning show. We did 2 morning shows this week, and we'll check it all out there. Let us know if you like them better, if you'd rather have them in the afternoon. We're just looking at options here for it, and we enjoy being here with you, whether it be at 7 a.m., of course, or tomorrow. We go back to our 11 o'clock time frame. Come and join us, would you? We'll see you then, everybody. Have a great Thursday afternoon. The main event coming up next.